Hello and welcome to Livewire Markets. My name is Chris Conway. Today I'm sitting down with Joseph Sitch. Joseph is the Co-Chief Investment Officer of Equities for the Victor Smorgon Group. Joe, thanks so much for sitting down with Livewire today.
Chris, good to be here.
Joe, talk to me about the group's investment approach. How does it inform the strategy?
So the group's always had a long-term thematic approach, and the reason for that is we want to invest in where we think the world is going, not specifically where we think the world is. Once we establish a thematic approach, we want to make sure that we have a blend of themes, some that are structural growth, some that are more cyclical, and some that are more defensive. And the importance of having uncorrelated themes, it allows us to hold those thematic views for a longer period of time. Once we invest with a thematic approach, we then think like operators. Most of the investment team have worked in operating businesses, and we think that sets us apart a little bit in that we focus on what makes a good company. We focus very clearly on the supply chain and the supply-demand dynamics.
Yep. Joe, I'm just going to pull on a thread there, if I may. So that operator mindset seems critically important to the business and the way you construct the portfolio. Just tell us a little bit more about that, because I think the viewers will be really interested in it.
Yeah, great. So we've been really fortunate that there's a longevity within the Victor Smorgon Group since 1995. A number of our team members have worked at the group for over 10 years. The investment team stayed together for over 5, and a number of those investment committee members and investment team members have worked in Victor Smorgon Group operating businesses. What we think that allows them to do is think like owners, think like operators, and whether that's approaching mine sites, thinking about competitive advantages in supply chain, particularly as we're seeing industrial automation, and asking companies questions, how they operate.
Yeah.
That's appreciated by companies that we speak to, and I think that we get good access and good engagement based on being long-term holders, but also asking operational questions rather than merely financial questions.
Yeah, no doubt. All right, let's get back to the macro, Joe. There's been some volatility this year. What do you do when something unexpected happens, like tariffs?
It's a really good question. It's an important one for us because there are more and more macro forces. I think the thematic approach is paramount to us. So when an event like the tariffs occurs, we go back to our thematic framework. So, if we're invested in gold, we're invested in gold due to unsustainable debt levels. We're investing in gold off the back of increased medium exchange happening outside of the US dollar and central banks accumulating gold. When tariffs occur, we can go back to that framework and those 3 key reasons are maintained. So we re-underwrite our thesis, whether it's electrical infrastructure. The US is still replacing its electrical installed capacity every year. China needs to install a significant amount, and India, as its populace are getting wealthier, it's requiring to install more copper and copper wiring. So we really underpin that thematic framework, and then often it presents a buying opportunity when the short-term macro deviates from a long-term theme. So we were quite active selectively in the tariff chaos. Gold miners fell 6% in a week, despite the fact that the gold price rose. Yep. Electrical infrastructure companies fell in excess of 15% at the same time that governments aren't going to allow electricity and the lights to go off.
Joe, a couple of the other big macro forces, rising debt levels and protectionist policies. Just talk to me about how they're affecting the long-term investment strategy.
So rising debt levels, and importantly, the ability for governments around the world to service their debt, is really important. We think that there's a strong correlation between governments' ability to service their debt and unsustainable debt levels and increased liquidity into the market. So what that's translated to is treasury issuance has come much shorter dated versus longer dated. And we think that actually the effect of that is quite stimulative to equities and equity prices. The other way of looking at it is the value of the currency is devaluing. And we think that's what has driven, the price of gold really has compounded over 8% since 2001. Yeah. So that's really supportive of gold. As to the protectionist policies, there's two major themes that we're seeing there. The first is as countries are reshoring their supply chains, they're using the opportunity to implement and install a number of automated technologies as part of their supply chain because they don't have the competitive pricing in terms of labour. So they're needing to make up the difference in terms of productivity through automation. Yeah. When they're not able to use industrial solutions to improve productivity, we are seeing that rebuilding the supply chain is expensive. Mm-hmm. And we think that's an inflationary force as well.
Joe, you talked about the macro providing a supportive environment for equities. So how are you thinking about risk at the moment? Are you more defensive or are you more on the front foot?
We've always had a pretty healthy balance of some cyclical growth equities, structural growth themes, and more defensive themes. Our split around those doesn't really change too much because we are an absolute return focus, and we find over time that the ability to compound our capital the group invests in the fund, outweighs the increased volatility by being all in growth or all in defensive. What we do find is that we do make tactical changes. So, for instance, entering into the tariff environment, we'd actually observed that the US dollar was strengthened, a number of liquidity in the market was starting to dry up, and we had shifted probably from 35% thematic defence to 40% defensively focused. Right. At the time when the tariffs were announced, a number of the more growth parts of the portfolio fell. Yep. And that provided buying opportunities. And it's more focusing on what our view on market liquidity is and how the themes are playing out rather than trying to forecast macro. Combining that with where relative prices are within the companies that we own. We tend to own companies for a long period of time, but you have to admit companies do get overvalued or undervalued, and we try to be disciplined in taking advantage of that volatility. Yeah.
Just one follow-up, if I may there, Joe. With those portfolio balances, do you have limits? Is there any up and downside limits?
So we have limits at the stock selection level, so we won't go more than 15% of cost there. And what we've found is over time, we would rather have 4 or 5 names that we have conviction in, somewhere between 5 and 10%, rather than one stock at 15 and the rest at 2 or 3. Sure. Again, that allows us to be flexible and dynamic and not reliant on one company. But at the same time, if there are companies that we believe can move the dial, that we get the attribution and the returns from them.
Let's talk about FY26. Which macro trend do you think is going to be the most significant for markets, and what impact might it have?
Now, our thematic process is on themes that we think are longer term. And we've certainly seen that over a 3 or 4 year period, our sort of process around the themes playing out certainly translates. But as we turn more immediate, we've just come out of earnings season. Yep. The electrical infrastructure companies and the installers of cable and wiring around the world have all just raised their guidance. So that's companies like Prysmian, who are the lowest cost. They operate in the majority of the markets. They have some natural monopolies in some niches there. So they've just raised their guidance, and we've seen it from Meta and a few others, the hyperscalers. Their CapEx spend is significant. So if we're looking at a 12-month horizon, certainly the electrical infrastructure is a really interesting place to be at the moment.
Joe, thanks so much for sitting down with Livewire and taking us through that.
Thanks for having us.
If you enjoyed that interview as much as I did, make sure to give it a like, and don't forget to follow our YouTube channel. We're adding lots of great content every single week.